Welcome to LegalEase on Me, where we make complicated legal stuff simple and easy to understand. I'm your host, Melia, and today we're going to be talking about reevaluating your business structure because is an LLC always the right legal structure? I know y'all like it, but we're going to talk about other options. So, business structure, LLCs, what you need to know before making that decision. And ask yourself this question as we get started. Why did you choose an LLC as your business structure? I'm going to take a bet that it's probably because that's what everybody else was doing. And that's just simply the way that you thought you should organize your business based on the most common form of business structure that you're familiar with. Not saying that it's wrong. Might be completely, entirely appropriate for your business, but it may not be. So what we're going to do today is talk through the most common business structures, what they cover, to give you just a little bit more information about what's available to you. Have that match up with what your business structure is, and maybe by the end of today's discussion, you might want to take a different course of action, or maybe not. But before we move forward, I always have to say this. I am a lawyer, not your lawyer. If you need a lawyer, hire a lawyer. This is not legal advice, just meant to be educational. Let's go. All right. When you first started your venture, whether it was creating content, you aspired to be an influencer, or you launched your small business, and you're making that decision around what structure you were going to choose. What did you choose? Right now, I just want you to grab a pen, write down the structure that you chose, and then right next to it, I want you to take a second and jot down why you chose that structure. Why did you choose that structure? While you're doing that, I'm going to talk about some of the most common business structures, well, not the most common, the only business structures other than an LLC that are available. Number one, a sole proprietorship. A sole proprietorship. Sole proprietorship. What is a sole proprietorship? It's the simplest form of a business structure. Literally, it's the form that if you did nothing and you just started to sell products or offer services, you didn't file anything in your state, and you had to be recognized at some point in the future as some form of a business entity, it would be a sole proprietorship. The advantage of that is it's easy to set up. Again, fewer regulations. The downside to sole proprietorships, personal liability and a responsibility, meaning it's all on you, right? It's all on you as the business owner. You place yourself in direct line of fire of the regulators, of lawsuits, of all of that. You are the business. That's a sole proprietorship. Now, partnership. That's self-explanatory, right? It's when two or more people come together to run a business. Two or more people come together to run a business. And then there's generally two types of partnerships underneath of that umbrella, and that's a general partnership and limited partnership. In a general partnership, all partners are equal. Equal responsibility for debts, equal responsibility for liabilities. In a limited partnership, the limited partners have limited responsibility and limited liability. All right. The general partners can be in a limited partnership, but if they're the general partners, they have unlimited liability. All right. So are we tracking? Now, another business structure that we're all familiar with, corporations. A corporation is a separate legal entity from its owners. It's like a separate person. The owners are not personally responsible for the company's debts or liabilities. And the two forms of corporations are C Corps, C corporations, or S Corps, S corporations. All right, and I'm sure you've heard of these, but the main two difference between these two types of corporations would be how they are taxed. All right, so how the corporations are taxed. And if you are familiar with the S corp structure at all, you understand that an S corp has pass through taxation. Pass through taxation. So, what does that mean? What does that mean? So, pass through taxation means that the corporation's income and deductions and credits are passed through to the shareholders. Are we clear? To the shareholders who report their portion of their income on their individual tax returns. Does that make sense? All right. So then what the subject of this whole episode is about, the LLC, the go-to. The LLC is really a hybrid of the partnership and the corporation and provides liability protection of a corporation while offering some of the pass-through protections of and benefits of the partnership around taxation. Are we clear? All right. So what are the factors that you should be thinking about when you're reassessing? Because if you're listening to this, chances are you've already established your business. You've already selected and registered your business in whatever state that you're in, and that's done. So, what we're asking you to do is to reassess. What are some of the factors that you should consider? One, liability. How important is personal liability to you? If it's a priority, an LLC likely is going to be a better choice than a sole proprietorship or a partnership because, again, it limits the owner's direct liability, period. So it's the business that is sued and not the owner of the business because the person is not the owner. I'm sorry, right? So that's the difference. Taxation. Consider how each business structure is taxed. Again, that flow through taxation, not being taxed twice, is a very important consideration for folks. And having that pass through taxation is a lifesaver for many. So S corps and LLCs provide that flow through, pass through taxation, as we say, while C corps are subject to the double taxation. So you're paying corporate taxes as well as taxes on any income taken from the corporation. So think about that. If you're organizing your business and you're considering a C corp, you're going to have to pay taxes twice. And then management and control. Management and control. If you prefer to have your complete control over your business, a sole proprietorship, or a single member LLC, meaning there's one member and that member is you. You're organized the business. You're making all of the decisions for the LLC, even though the LLC is directly liable for any losses, any debts, any suits, but you are still the sole decision maker of that business. Maybe that structure is right for you. In a partnership or a multi-member LLC. So now this is an LLC that has more than one member. And these members would be listed on the articles of organization, the paperwork that's filed with the authority in your state, wherever you are. That decision-making authority is usually divided up and shared amongst the partners or members. And that's where things like your partnership agreement become very, very, very important because that is going to provide the detail around how that authority and decision-making responsibility is distributed amongst the members of the LLC. And then another consideration is cost and formality. Corporations and LLCs both require a significant amount of paperwork to maintain, to form, and to maintain. It can be more expensive to set up compared to a sole proprietorship and a partnership. And additionally, corporations are subject to more regulations. So those are just food for thought, you know, not convincing you one way or the other. This is just what it is. And things that as we are forming our businesses, we should be thinking about versus selecting a business structure based on what the majority of folks that we know who have started businesses have chose structures that they have chosen. But making sure that we understand sitting down with a legal advisor, one in your area, one in your state, um, a tax professional to think through. I mean, does pass through taxation really matter to you and why? There are thresholds that of revenue that make that decision more significant. So a tax professional can help you understand based on where you think you're going to be within a given year with respect to revenue, whether or not, say, the S corp designation is appropriate for you. But thinking about these things and making an informed decision about your business structure is extremely, extremely important. What I say is you want to be thinking about these things because we're always planning for worst case scenario. I know that seems dark, but it's true. In a perfect world, none of this matters. You pay your taxes. Everyone does what they're supposed to do. Everyone gets along and the business is prosperous and fantastic. But inevitably, there are going to be things that we face as business owners, as business organizers that we should be planning for in the beginning. And having a legal professional, a tax professional to walk you through these things, to ask you these questions are extremely important to make sure that at the outset, as you're organizing your business, you are absolutely selecting the right structure that works for you. There are a few other things that might dictate which structure you choose. For example, Rob's rollover. So anyone who has ever done a Rob's rollover, and what a Rob's rollover, and this is going to be an oversimplified sort of overview of what a Rob's rollover is, but that is rolling over a 401k into a corporation to fund a corporation. And that is creating um, a 401k trust within that corporation that then buys shares of that corporation. And that is then the way the business is funded. That's a really cool way um, to use your own 401k to fund your business. It's not a loan, you don't have to pay it back. And in a market like the one that we're in now, where I would rather be personally in control of my money versus allowing the stock market to control my money, being able to grow my business with my money is important. But if you choose a Rob's rollover, you absolutely have to have a C corporation, an LLC. A S corporation is not an option. And so those are the sort of complex considerations that sometimes go into planning a business structure that it makes sense to pause a minute and not just assume that the only way to go is an LLC because that's what we hear about. But you might be leaving some creative structures out of play by doing so, right? And these are things that, again, a legal advisor or a tax advisor can help you walk through and understand what all of your options are based on what's available to you. And you never know, you might find some creative ways to get things done that can save you time, money, and certainly risk on the back end from a liability perspective. So let's talk through a few case studies. These are real life examples that can help illustrate the differences between these business structures. Because what I said, even in LegalEase on me, they have been just a little bit complicated. So let's start with sole proprietorships. Take a freelance graphic designer. We know what freelance graphic designers are. Think Fiverr, think Upwork, think folks that are providing services through apps like that or independently. that operate under their own name, um, but maybe they haven't, again, formalized the structure through their state. They would typically fall under the structure of a sole proprietor. Again, they would be personally responsible for any debts or liabilities that occur during their work. So, something goes wrong, there is a copyright infringement issue. It's not the business that is the subject of a potential suit, it would be the individual, the sole proprietor. They are directly liable for the bad thing should it happen. Who wants that? Partnerships. Think about two friends, which I don't know. It works sometimes. I would think about that, but this is just for example purposes. Two friends decide to open a coffee shop. They might form a general partnership. Again, a general partnership is where both friends would have equal rights and responsibilities and obligations with respect to the business's debts and liabilities. However, they also, the two friends, could consider forming an LLC, a multi-membered LLC, to limit that personal liability. So you sort of start to see how there are different options based on um, the structure that protects the interests of the business owners. So if I don't care much about personal liability, maybe we'll go at it from a general partnership perspective. But if I do, maybe a multi-member LLC is the way we go. A corporation, think about social media influencers. Social media influencers, are you listening to me? Are you hearing the words that are coming out of my mouth? You have a large following and a line of branded merchandise. You're really figuring out how to maximize your online presence. You're doing it the right way. You created merch. You might benefit from forming a corporation. Incorporating might offer you limited liability protection and provide certain tax benefits that work for you, especially if you have high income. Right. Again, a tax professional is going to ask you questions around what do you anticipate making from a revenue perspective in your taxable year? And from there, the decision may be LLC or corporation. Because they're going to talk through with you the tax benefits. LLC, a content creator that collaborates with other creators. You see a lot of that. They're working on a joint project. They may benefit from a multi-member LLC. Why? Because of the offer of limited liability protection and pass-through taxation. So it allows the creators to share decision-making authority and profits while limiting liability. But the point is, you should be thinking about your business or potential business, these partnerships, these collaborations as a business, and deciding what matters most strategically, following that out with sound advisement from professionals, not your sister, brother, cousin from around the corner who thinks they know, and making decisions that are going to be most impactful and beneficial to your ultimate goals. So that sort of leads me to my next point, which is how do we then evaluate your current business structure and whether or not your current business structure is the right business structure? And I'm going to say working with a professional that can perform a official business audit. I do this for my clients before I launch into any official advisement for my outside general counsel services, my fractional general counsel services, where we become the legal counsel for small and mid-sized businesses. A requirement before I take on a new company is that we do a business audit for this reason, because we cannot build on what is already a faulty foundation. If you've made decisions about your business structure that have not been founded or grounded on the things that I just talked about, then anything that I would come in and do as your legal advisor might be based on a faulty foundation. And that's not going to be good for you. It's not going to be good for your risk profile. And so the first thing that we need to do in assessing assessing the health of your business and whether or not you have the right business structure is to perform an audit. And that's going to be looking at the totality of your business. What you do. Are you a products or service business? Who are your customers? What is your annual revenue? What is your sales model? What is your go-to-market strategy? All of that. What types of agreements do you have in place? How do you contract with third parties? What data do you collect from customers? Do you have the right consents in place to be able to collect that data? Do you have the right notices? Do you have the privacy policies? We're looking at your business from end to end and creating a comprehensive risk profile and picture of your business, which includes your organizational structure. So assessing the liability exposure is also a part of that. So as we do this business audit, we're looking at, all right, so this is a service-based business. Maybe it's a hair salon and there is physical contact, chemicals. There's, folks coming into a brick and mortar location. So there's premises liability issues. There's all of these things where we're assessing your liability exposure. And from there, we're able to determine whether or not you're in a high risk industry. Do you regularly engage in activities, again, that expose your business to different types of liability? What are those different points of liability? And how then do we mitigate that? And which business organizational structure, an LLC or other, which org structure is going to best protect the business and best protect you as the business owner? That's the way you do it. So what are some of the other things that we're considering in this audit? We're reviewing your tax situation. Have you ever filed taxes? I know we like to think that everybody is filing business taxes, but we know that's not true. So we're looking at, how long have you been in business? Have you been filing your regular business taxes? Are they up to date? Are you taking, are you taking, are you being paid? Are you an employee of your business? Are you taking pay from your business? How are you taking pay from your business? And I hate to say this because it seems so basic, but do you have a bank account for your business? Are we commingling funds with our personal funds? All of those things. And so, for this consideration, I'll always ask, do you have a tax professional that I can speak to? So it's the legal advisor working together with your tax advisor, your tax professional, to really understand, again, that part of your risk profile, because that's also going to be very important, not only to understand where you are today, but to understand where you want to go with the business. Because I can't say this enough. It's not enough just to cover risk liabilities today, but how do we want to grow? Every business should have a growth strategy. And your business should be built in a way that allows you to grow forward in a healthy way. And your org structure is the fundamental piece of that pie. If you're not formed with the right business structure, then you cannot possibly grow in a positive direction. And then weigh the cost and the formalities. So again, there are different costs associated with these different org structures. So what makes sense in terms of the cost to maintain these different business structures, the regular maintenance of maintaining these different business structures based on where you are in revenue, where you are in maturity. So for some, it may not make sense to be a C Corp today, but maybe in 5 years, when we reach a certain revenue threshold, we're going to be revisiting that and reorganizing the business based on how we've grown. So there has to be some plan for a regular reassessment of your organizational structure to make sure it still makes sense. So it's not a one and done. Once you've done it, it's done. You never have to go back and revisit it. You should have a regular cadence of reassessment of your risks, your liabilities, your growth plan and strategy, and yeah, working with your tax and your legal professionals to do that. So let's move into our rundown segment. In this part of the show, this is where I give some quick tips on how to apply the things we've talked about in the episode, because we don't want to just make the complicated legal stuff easy to understand. We want to make it practical and easy to do. So in this rundown section, these tips are about choosing the right business structure. Number one, assess your liability exposure. Carefully consider whether your business activities expose you to a heightened level of risk. If so, a business structure that includes limited liability protections may be something you want to consider. Those would be LLCs or corporations. Think of those. Number two, consult a tax professional. Sometimes you might find a legal professional that is both a tax expert or a tax expert that is both a legal expert. I doubt it. You have to make the right investments on the front end. When you think about where you are allocating your dollars in the beginning of launching your business, you have to build in the cost of legal and finance. Those are critical if you want to have a legitimate business, if you want to have the business that can grow, can scale, and that is sustainable. All right. So seeking and consulting tax professionals to determine the most tax efficient structure, along with the best legal structure. All right. Those go hand in hand. Number three, plan for growth. As your business expands, as your business grows, you have to transition into more formal business structures that can accommodate that growth. If you don't do that, you have already planned to fail. You cannot raise capital without a sound, firm growth strategy. For example, if you're not filing regular tax returns, you're not going to get grants. You're not going to be able to raise capital. If you don't have bank accounts, you've already X'd yourself out of the ability to fund your business through these various funding strategies. Reevaluate these structures periodically. And what that means is what I've already said: reassess. And again, always seek legal advice. Always seek legal advice. You are not supposed to be the expert in every area of business. You are the expert in the fun stuff, what you like to do, what makes your business work, the heart and soul of your products, your services, what connects you to your customers. Leave the deep, murky, legal and compliance stuff to folks like me and your tax professional. And that's it for our rundown segment. We hope these tips help you. We hope this episode helps you make informed decisions about choosing the right structure for your business. And as always, don't forget to subscribe to LegalEase on Me podcast for more episodes aimed at making complicated legal stuff simple, easy to understand, and practical and simple to do. Until next time, happy creating.
Talking all things legally.